Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alconin, along with Dennis Dick, and we are bringing back Harlan Pyan. He is the co-founder of All About Trends. Harlan, how you doing, and what have you been up to?
Hey, no complaints. I'm just enjoying the summer. Up here, it's a pretty cool summer, actually, aside from a few little heat waves, but I can't complain. You guys?
We're doing good here. We miss your candid opinions on the markets and your witty phrases. What do you have for us today?
Well, how about we talk about the phrase that pays? When you look at the S&P, it's been in a trading range virtually all year. And the phrase that pays is in the face of fear, at support, in tandem with the indexes. What do I mean by that? Anytime you see these markets get slammed, they come down to either a trend channel support, a lateral support, or a Fibonacci retracement level. We've seen that at the July lows. We've seen that at the end of July lows. You know, those are key Fibonacci retracement levels. So what do we do there? Right then and there, I'll go, okay, this is an area, these are areas we want to be aware of where the markets that are pulling back into them, that the market can get defended and take off. We've seen it at the beginning of July. We've seen it at the end of June, or even in June, too. And every single time it does that, I'm looking for names that are in clearly defined uptrends that are pulling back off highs to either support at the 50-day, a trend channel, you know, a lateral support, what have you, whatnot. And that's where we've been making all our money. The flip side is we sell strength. Breakouts, we've been selling a lot of breakouts. There's a key, though, with that. It's okay to be doing these breakouts here when you see issues breaking out of bases. However, when you see them starting to break out after the market has made a run, like we've seen, I mean, it's been don't blink. You go up 3, 4, 5 days, and you come flying right back down. Those breakouts after you've made a nice run, like, you know, the NASDAQ makes a 200-point run, you know it's short-term expelled a lot of energy. Your breakouts there have a higher degree of failure than if you're catching them at their first pick on, you know, starting off.
Okay, so
that's what's been working for us.
All right, so since we kind of were closer to resistance than we are support, could you give us a few examples of these false breakouts or stocks that you sold on to breakouts? How you did it without were you selling to exit or were you selling to get short? Did you do it when it went up through the level and you just said I'm doing it, or did you try and wait till it came back down through it?
Well, you know, we're all about low-risk alternative entry points. A lot of the patterns that we like are issues that are either they've been in a correction and they're doing what we call a RSCC, which stands for right side of cup crossover. You know, anyone that's a can-swim-oriented person, that they love cup and handles. Well, you know what? That's all fine and dandy. I like them too. They work. Made a ton of money with them over the last 20 years. However, you cannot have a completed cup without having the three components of a cup. You have the left side of a cup, which is a downtrend. You have the bottom of a cup, which is a basing pattern. And then you have the coming up the right side of a cup. As they start to cross over from the bottom of a cup, that's when we start jumping on them. Good example is Jack. We picked off Jack, you know, at that time where it was just starting to come up off the right side of the, starting to work up the right side of a cup. And so that was a nice trade. The other trade are, like GTN, what is that, Gray Television, I think it is. That was another one that as it started to work its way while it was in the base, that's when we picked it off. It broke into a new high. We sold it. Sure, it carried people for a few days, and then it just imploded for a day. I think it stopped everybody out on that day. And, now it's starting to work back up.
What was the symbol on that one? What was the symbol on the last one?
George Tom Nancy.
Oh, okay.
Harlan, what are your thoughts? Harlan, we got a few people talking about Disney in the chat. They're going to report earnings here after the bell. This stock has been a monster. It's been pretty much straight up and hasn't really had any pullbacks at all, even with the overall market. If you're trying to find, stocks that are driving and keeping this market floating, Disney's got to be one of them. Made a new all-time high again there yesterday at 121.73. What are your thoughts on Disney as it goes into tonight's earnings report?
Well, I'm looking at a daily 6-month chart. If you look at the June lows where it busted below the 50-day for a day or two, kind of shook a few people out. Line up your bottoms. That's trend channel support. Line up your tops since this issue broke out, big capper, and you'll see this issue has been pushing a trend channel resistance as it goes into earnings. Now, that brings up an interesting point because pull up a chart of data, DATA. There's another one. It got right up to trend channel resistance if you line up your tops off the since May. So here's an issue. Data went, it was sitting at trend channel support, being ran into earnings. There's that phrase, if you think about it, buy the rumor, sell the news. Maybe they're running them up into earnings. Anything that's been ran up into earnings, I don't even bother with it. I just kind of tend to stay away. It just doesn't work for me. If it works for everybody else, hey, that's great. That works for them. More power to them. But I just don't like chasing stocks that have been running into earnings. And you can take a look at ABG, same thing. Came up right into earnings. They topped it, ran it right into earnings. Earnings comes out and whap. So the same thing goes for Regeneron, REGN. You take a look at REGN, you line up your tops off the March high. What's that?
It's got a huge pop today because they reported earnings here this morning, so it's actually trading up here at 585.
This is exactly what I mean by the phrase that pays. All right. For us, we're looking for, when you look at the indexes, issues that are the indexes, we're looking for levels where, in the face of fear, at support or a support zone. If you look at the S&P, it came down late July, 78.6% Fibonacci retracement. The NASDAQ was at a 61% Fibonacci retracement, and then they launched. They launched the last 3-4 days. If you look at Regeneron, when it hit 530, that also corresponds with the low on the S&P and the NASDAQ. So that face of fear down at that level, this thing went from 560 to 530. And it was in that face of fear, that's where we bought that stock. So at the open, if you line up your tops, all those spike tops, there's another thing for you to pay attention to. You notice what happens every time it gets ran up? It hits a trend channel resistance zone, and that's pretty much about it. So at the open, all that stock we bought in the face of fear, at support, near the 50-day moving average, we're selling it all right at the open.
In Regeneron, huh? Okay, good trade.
Yep.
Got to ask you about Apple here. We lost the 200-day moving average, also lost the low before the big earnings run up here. Is we going to see some more downside here in Apple?
Well, you're probably going to see some spillover, but Apple's been a rather interesting issue because if you look at Apple back in, was it the June lows? No, the recent July lows, I think it was. Let me pull Apple here for some reason.
119.22 was a level that they ran up ahead of earnings, and then they whacked it on earnings, hit that same level in after-hours trading, bounced, but we finally took it out yesterday, and we also are trading below yesterday's low right now in Apple.
Well, here's an interesting thing. First off, sometimes you got to operate in multiple time frequencies, and when I look at a 6-month chart, daily time frequency, look at the beginning of July. You could draw a line, let's say, across 121 from going back from March and into the July lows, which was a key support zone on the indexes. That stock broke support at call it the 121, as you see that tail there at the beginning of July. And what happened right after that? That tended to be a shake and bake, shake out low. Meaning, if you were long, they popped your stops, nervous Nelly, she got stopped out, she got shaken out, and they ran it after that. So while it looks like this 118, from yesterday's close, looks like it's breaking down, yeah, it is. It is. However, take a step back and go take a look at a 3-year, 7-month chart off of the 2013 lows. Draw a huge trend line. This thing is spitting distance away from major 3-4 year support uptrend. So, here we have a stock that's, coming, it looks like it's imploding. It makes up a big percentage of the index. And I can see why people all say that. But if you take a bigger picture and step back and look at the big overall trend of the stock, you're ready to take a support zone. So that doesn't mean it's going to go flying right back up to 132, 133 resistance. But, it just went from 133 to 118. So if you're thinking about shorting this breakdown, you're a little late to the party in the short term. Sure, if you're a day trader or something like that, sure, that's great. Maybe you can get a little bit out of it. But, I hate chasing stocks on the short side. I hate chasing stocks on the upside because more often than not, the bulk of the move has already been made.
Harlan, what are your thoughts here on Google? Because it's had a very interesting 5 or 6 trading sessions here now. We had obviously the big earnings gap and go for 3 days, and then it pulled back in. And at the 650 level, it's starting to find some support. And if I look 4 days in a row, you had lows of 653, 652, 651, 651. So all right in that same area. And now that the last 3 days, those lows are moving up to around the 657 area. If you look just really short, you can kind of almost see a couple handle there a little bit there. Do you think that Google is gearing up to maybe break out here again?
Well, that's a hard call. I mean, for me, I haven't been paying attention to it. When I see a stock gap like that, right away I'm thinking anybody who owns it. Which Google are you looking at? GOOGL?
Yeah, go look at the L. I like looking at the L because they have a long-term history on it. GOOGL.
Okay. Anything that goes from 560 to 700, for Christ's sake, you just got to sell it. So that earnings pop, buy the dips and sell the rips, right? Well, that was one heck of a rip. So you obviously have to see the stock, expect to see the stock do some retracement, due to profit taking. But right now, I'm looking at it the last week or two, it's just sitting here tight. And I guess if you zoom in on all that, let it break over that, what did you say?
668 is the high from 3 days ago. I think it's got to get over there to really start to try to break out here.
Yeah, and that's the 1, 2, 3, 5, 6 days high. So yeah, I could see that. Now think about it. We've been selling off our market. Google is a tape painting stock. It makes up a huge percentage of the indexes. And it's probably responsible for why the index made that beeline off of the July lows into the July highs because of this name. So because it makes up such a big percentage of the index, and it's going to have an impact. So, I guess my view in the short term, draw a line across there. If it breaks out, maybe it could make a run to retest the highs. If the NASDAQ retests the highs, this could be a driver of it.
All right, Harlan, before we let you go here, bid in the trading range in the market, and I like your thesis of, trying to buy stocks on support, coinciding with the S&P, flip side, selling resistance. Now we've backed off a little bit, from the highs here. Are you going to wait for another shot up in the 2100 handle, or you think we're more likely just to, float down, maybe not see those July lows, but get a little bit more of a pullback in the overall market before you start looking for support?
Well, the hard part is when you look at the whole big trading range on the S&P, right now you are dead center in the middle of that trading range. So, it's a hard call right here. I mean, support, we got major support at 2040. Resistance, we got major resistance at 2130-ish zone. Buy support, sell resistance. But you've also got, a off of the February lows, you got a trend line coming up there. So, and you've also got the 200-day moving average at 2070. So those levels, 2070, 2080-ish, they could easily get defended. But the flip side is you can come back down here and you could pull, just look at June. Off of the May highs down to the June lows, you hit a low, you bounce for 3-4 days, and what do? You come right back down to the 2070, which was also another support level, and then you bounced again. So if we retrace and come back down to the 2070, you want to watch and see the S&P 500 get defended at that zone. So, but for right here, it's more of a market of stocks. Take your time, the dog days of summer. Only the best, forget the rest. So you want to look for the strongest stocks and the strongest uptrends that are pulling back off highs to a support zone. How about Tenet Healthcare, which that's where I found my Tenet Healthcare was yesterday. So good example. Market's pulling back, but you know what? Tenet Healthcare, that was a nice little pullback off highs right down to the 50-day. So this is what I mean. You see these stocks, they gap up, they pull back off highs to a support zone, and, they start working higher. So those are the ones you want to be in a lookout for. But as far as the S&P right now, it's in the middle of the road. So time will tell. Could use a little bit of
Could you give us just 30 seconds or 15 seconds on Ambarella, the component maker for GoPro,
yeah.
focus of
That's
Citron?
An excellent example of what I'm talking about. In the face of fear being the phrase that pays. If you look at the June lows, what do you notice? This stock imploded. Of course, if you look at the June highs, you knew this. June highs in the indexes and June highs in this, what do you notice? They're both at the same point. So it was really a matter of in tandem with the indexes. You knew it was extended. You knew there was going to be a point in time where it was going to have to pull back. This is what I mean by don't chase these things.
Okay.
So what did it do? It got slammed, came right down into a, close to the 50-day moving average, chewed around for a month or two, and then it ultimately went sideways around the 95 to 100 zone. And then what did it do? It launched off of that. You knew it was support. Sometimes these issues come down to support, and you need to see them stabilize first. So then, what do you notice? Off the July lows, in tandem with the indexes, this issue took off.
All right. We've been on the line with Harlan
about.
Pyan, co-founder of All About Trends. Thanks a lot, Harlan, coming on. We'll speak to you again soon.
Thank you. See you later. Take care, guys.